If you have been struggling to trade order blocks or your supply and demand, this is the video that you must watch up until the end, guys. So firstly, I'm just gonna explain what is an order block or your supply and demand. So basically, those order blocks are where big banks place their big orders, guys. Your Goldman Sachs, for example, that is a big bank that moves the market, just because the markets are moved by big banks, as you already know, guys. And we trade supply and demand, meaning that we must be in line with the overall big banks so that we can enter good trades, guys. So this is the bullish example, and then this is the bearish example. So I'm just gonna explain each and everything step by step so that you can understand up until you can place an entry. And by the end of this video, I'm gonna show you an example on how to place your entries using order blocks or your supply and demand, guys. So this is the bullish example. As you can see, you have your low, you have your high, then you have your higher low, then you have your higher high, then that gave you a break of structure. So what I basically use to spot out like my order blocks or demand zones, just because we are in a bullish example, I use a Fibonacci tool, guys. Now, so from the low, I start from the low whenever we are bullish, and then whenever we are bearish, I start from the previous lower high to the lower low, guys. Now, so as you can see here, from the low to the high, whatever's below this red line here is my order block. I'm gonna draw them. Maximum is 3. I use 3 maximum so that we can just get like a feel of the market, guys. So we have this overall demand zone below, of which is an order block, obviously, like I explained. First order block, second order block right there. So I'm just gonna ask you guys which order block is valid here. We have the first one and the second one. I'm just gonna count up until 5 and then explain in the comment below why you think that the first one or the second one is important, guys. So 1, 2, 3, 4, 5, guys. So all the order blocks are working, guys. Everything is valid. Like I said, as long as you use your Fibonacci tool from the low to the high, just know that everything is working. And what you're gonna wait for is for the market to tap into an area of your order block. Then you wait for a market structure shift, just like this. Then after getting this market structure shift, then that is when you'll be entering your trades just below here, just like that. And don't get me wrong, guys, sometimes you can get a market structure shift and then the order block fails, guys, and it happens. But like, you just have to wait for a market to tap into this order block here and then get a market structure shift or a change of character. That is when you can start looking for your buying opportunities, just like this, and then you target the previous high here. And then whenever you're looking for order blocks, let's say maybe bullish order blocks, you're looking for a sell to buy candle area, guys, whereby the market will give you this type of formation. Before I go in deeper, guys, so it's a sell to buy just because we are looking for the bullish order block here. So it's a sell to buy, just like this. So you'll be having your structure like this or your candles like this. So this red candle here is your order block, guys. You can just draw it out like this. You can just use the whole red candle to map it out as your demand zone or your order block, like I told you. And then whenever it comes to this area here, this bearish order block, is the same thing. You wait for a green candle, just like that, followed by your red candle. So it's a buy to sell whenever you're looking for your bearish order block, guys. So this is the formation that you'll be looking for. Then you can just highlight each and everything as your overall supply area or your order block if you want to generalize everything. So as you can see, that's your order block, and like I told you, you just have to wait for the market to tap into it. Then that is when you'll be looking for selling opportunities. So whenever you are not waiting for this type of formation to happen, guys, let me show you like what will happen, just because it happens all the time. You just need to be awake. So let's say maybe you get this overall zone here, and then it's tapped nicely, guys, and then the market reacts to it nicely, just like that, and then it pulls back to the upside like this, and then fails to break the high. Instead of breaking the high, it fails, and then it will just pull back to the downside and then tap into this area here. So that is why I'm saying that you have to wait for a clean change of character here. And then sometimes you'll be forgetting that we have your liquidity here, of which that will be a topic for another day. So this is your liquidity here. So this happens, and then whenever we are at the extreme, you can either wait for a clean change of character like I showed you, just like that, this, so that you can buy, or you can just take a risk entry just because we are at the low, guys, or the protected low within this area here, of which whenever we tap into it, then we buy like this. You look for your overall target just like this, and then it fails to give us like that change of character. So it happens, guys. Now, so we're getting to the bearish example. We have 3 order blocks like I told you. Firstly, you need to map out like your high, then your low, just like this. So whatever's within this area here or above this area here, or which is premium, guys, now you have to look for your selling opportunities just above this area. So I'm gonna ask you guys, within these 3 supply zones or order blocks, which one is valid and which one isn't valid. So you have your 1, and then your 2, then your 3, and then I'm gonna count up until 5 and tell me which order blocks are valid and the one that isn't valid. 1, 2, 3, 4, 5, guys. So the order block that is invalid here is your 1, guys. 1, just because we didn't break this 0.5 level, and then if we didn't break the 0.5 level, this will be just invalid. The market will just push to the upside. And then your valid order blocks is this one here, the first one and the second one, and then we're just waiting for the market to come back structurally into that area. So let me just remove this. We're just waiting for the market to move structurally. So let me just remove this thing here so that I can show you what I'm talking about. So we're just waiting for the market to pull back up into this area. Then, since this one is in the middle of the price action, you have to wait for a change of character just like this, knowing that the market will just tap into an area of interest just like this and then sell off. And like I told you guys, you just have to use your risk management, just because sometimes it may be invalid whereby it doesn't work out and the market decides to pull back to the top of the structure or the extreme area of interest and then sells off at that extreme, guys. Now, so just like this, then it continues to push up in this type of format, then changes character, and then that is when it will push to the downside. And another thing before we get to the live charts, guys, now there is something called an imbalance, of which it's a fair value gap, and then it normally happens above a supply zone or below a demand zone, guys. Now, so let's say maybe the market pushes to the downside just like this. Let me just do this, guys. Now, so the market pushed down and then it pushes to the downside and then leaves a gap within this point. This gap here is called an imbalance. And then above that imbalance, so let's say maybe you have this imbalance here. Above that imbalance, you'll be having an order block here or a supply zone just like this. And then what will happen is that the market will just push to the upside, tap into this imbalance here, and then react to it nicely, giving you a change of character. And sometimes it will just push to the upside, tap into the supply zone before selling off, guys. But like either way, it has to fill this imbalance. And know that whenever there is an imbalance at the bottom of the structure, just know that at the top there is an order block. And then same in reverse when it comes to your bullish example, then the market will just give you the same format. Let's say maybe we are pushing up just like this, then the market leaves out a gap, then this gap must be filled just like that, and then below this area here of imbalance, there is always an order block. So it's either the market respects the fair value gap or the imbalance before giving us a change of character, or it'll just push to the downside deeper to mitigate this order block here. But like that is basically how each and everything works. And if you didn't understand, guys, we have a course whereby I go deeper into everything that I just taught you here. So let me just go into the charts here. Let me just remove everything. So we are looking at this structure here. Let me just look at the 4 hour, just because the 4 hour is pretty clean. And as you can see here, we had this market pushing down, we had this low here, lower high, lower low, then the market gave us a higher high, of which that is your change of character. And I can just draw them out. That is if you don't understand, so that you can understand market structure also, guys. Now, And sorry about the background noise, guys. My baby is playing in the other room. So we have a change of character just like that. Then we have this area of the month, guys, of which that's your order block. And as you can obviously see, this is a bullish order block whereby we had a sell to buy candle. I can also change like the thing is the candlesticks so that you can see. As we can see, you have your sell to buy candle, guys. That is why I was telling you that. And the reason why I keep my charts this black is to just keep my psychology clean, guys. Just because if you see red, you'll get confused or you get scared of the markets, just because we were used to seeing red whenever we are starting off with our trading. So as you can see here, from this point here, we had a high, then we had a low here, then we had a higher high around this point here. What you can also use, like I told you, is the Fibonacci tool from the low to the high, just like that. Then you'll clearly notice that we had a few areas of interest. So if I can just remove this, you'll also see that we had liquidity here, of which we're just gonna talk about it next time. So we had two other blocks here. We had this one here, this other block here, of which is the demand zone. As you can see, it's a buy to sell, guys. It's a sell to buy candle. Sorry about that. Sell to buy candle. Then we had another one of which it's within this point here, just like that. So as you can see, the market tapped into it, tapped into the first one, broke structures, and then tapped into the last area of interest before giving us those nice buying opportunities. If you switch to the 1 hour, that is where you'll clearly notice that these order blocks are valid, but like sometimes the market has to go deeper into the price action before reacting to one of the two. As you can see here, we refined it to this one, we refined it to this one, we tapped on both of them, then the market gave us a change of character after tapping into the last one, of which is the extreme zone. So from there we had a lower high, lower low, higher high, then we had a higher low, then we had a higher high. So obviously this is not a pullback, so it means that this is your change of character. As you can see here, the 3 candle pullback did not happen here, which means that this is an invalid price action. It's just everything in one, guys. It's just one leg from this low to this high. It's just one leg. So as you can see, from this low to this high, using the Fibonacci tool, you can obviously see that we tapped into an area of interest and also tapping into this liquidity section here, just like that. And then I'm gonna explain everything, guys, when it comes to these things here. And as you can see here, we had this area here, of which we take everything, just because you can see that this is your sell to buy candle. So everything here is in one price action. So that is why I used that, and our overall target is within this point here. And also you can also use like the 15-minute. That is if you are confused, then that is when you can get to refine everything, guys. So as you can see, from this point here, we still have a fair value gap. So from this low here, from this low here to this area here, that's a fair value gap. This because they do not meet at that area. So that is why I'm saying that that's a fair value gap, guys. So I've explained each and everything in this video, and I think you all understood what I was saying. And I'll see you on another video, guys. Peace and love.